Good morning, good morning. How's it going, guys? Nice to have you on this Tuesday morning. How are ya? Um, Weather's pretty good. Been getting warm. Yesterday was amazing. Yesterday was like early spring day, thank the Lord. Yeah, winter is finally slipping away and spring is slowly creeping up. And today I wanted to go through gold, take a quick look at oil. Also want to look at silver. We'll look at the dollar and we'll go through all the major currency pairs and take a look at what they are doing. We'll look at the biases. We'll look at what trends are in play and all that sort of thing and determine what is likely going to take place over the next week, 2 weeks, and so forth. Okay. So thanks for joining me again, and let's get right to it. Let's take a look at gold first, shall we? Let's shrink me down like this and take a look at gold. All right, so this is what we have with gold. Let's just do something like that. All right, so this is what we have with gold. On the monthly time frame, we know that we have a trend to the upside. Okay. Now the trend line is pretty far away from where price is right now, and that's typically not a good thing for the trend to continue holding. We look at where price is, and we look at where the trend line is. It's moved really far away from that trend line, and normally when that takes place, what we're seeing is price departing from that structure. All right, really overreaching at that point, and it tends to want to retrace down. But not just that, but usually those trends that exist on that time frame, once it extends too far, the trends will tend to break when price retraces backwards. So is that going to happen? We don't know. But we also have to look at other time frames to see if there are existing trends on those time frames. And when we look at the weekly time frame, we can see that there is an existing trend on this time frame, which makes this bullish. And here is the trend line here, and it is being backed up by demand right here. So this is a good sign for a continued move to the upside should price retrace down here. And I believe that's exactly what's going to happen. I think we're in the midst of seeing price do some consolidation up here at the highs, but eventually it'll drop down to this area of demand, and then we'll see a rally form from there. Okay. The only thing stopping price from dropping right now is this area of demand that we contacted. And as you can see from that area of demand, we got the push up. And where did it contact? It contacted our 4-hour area of supply. And so far, this 4-hour area of supply has been holding price quite well. We saw the initial push to the downside. Now it's rallying up a little bit. You know, this is just a little bit of ranging that's taking place right now. Okay. We have supply coming in on a 4-hour time frame versus the demand that's coming in on the daily time frame. So that's what's keeping price in between. All right. Eventually, one is going to break. It's either the 4-hour area of supply or the daily area of demand. I suspect it's going to be the daily area of demand, so that price can come and realign with the weekly area of demand, and then we'll see price continue higher. Likely. All right. That's my bias when I look at gold. All right. All right. What else do we got? Let's go over to oil. Oil's been kind of ugly. Okay. You know, when we look at the higher time frames, what we can see is that some supply was contacted, and that has been pushing price to the downside ever since. So, you know, it's possible that over the very long term, we're going to get oil to push down. But at this point, we have a demand zone holding right here. As long as that demand zone holds, price will not go down. But if it does break, then surely, yes, we could see price continue lower. And who knows how far it's going to go down. There isn't demand until really far down below here. Doesn't mean it's going to drop all the way down there, but something to consider with that higher time frame supply in play there. All right, let's go to silver. So silver we've been watching very closely because we're getting signals that price wants to go higher. I mentioned this before. And so, you know, on the monthly time frame, for me, the monthly time frame is bullish. Okay. The reason why it's bullish is because we created institutional demand here, right? Institutional demand came in here at around the $26 area. They push price up, they retrace back to that $26 area, and it's been an accumulation taking place ever since. So we have a trend line. It's not the greatest, all right? It's not the greatest, but I suspect that this area of demand is going to hold, and eventually we're going to see price head higher. Why we're seeing this stalling action is simply because gold is not ready to move up. And as you know, the two are correlated positively with each other. And so we're going to need to see gold do its thing, retrace into demand, and then shoot up with buying before this is going to continue. All right. Also on the weekly time frame, you may consider this to be a bullish chart. It is somewhat bullish. It's not a beautiful bullish chart. And what do I mean by that? Well, there is no uptrend here on the weekly time frame. Okay, there's no uptrend with significant buying taking place. Yes, we see that recently there was a buying area that was produced here, but as I've written here, it is of a low quality. It is not something that I would uh, be too ecstatic about. It's a low quality area of demand. So for me to really determine when price is going to start kicking in here to the upside, I'm focusing my attention on the daily time frame. Okay, so right now I put a yellow square around it because for me it's just like a traffic signal. Okay, the yellow signal is in between the red and the green. It's telling you caution. Okay, don't put your foot on the gas yet. There's caution here. All right, we have to stop from going driving to stop. Right, it's the caution. It's the transitionary period. So for me, it could also be transitioning from doing nothing to doing something. All right, so that's why I use the yellow caution. So I'm watching it and I'm waiting for something to be produced. What could be produced? Well, we recently saw that we had some demand down here, okay? And I put a note to watch for a move from here, and this is what we got. Price just fell short of hitting it, but then we got that move to the upside. We also had some supply here that I put a note there. Watch for this to be removed, for there to be upside. But when it was removed, gold was not ready to go higher, so therefore we got a push back to the downside. So I'm watching for some kind of bullish structure to be created. And, you know, this might be the beginning phase of the bullish structure, what we're having here. But there is a lot of ups and downs that existed since the beginning of this area here. So this may not be ready to create an ascending structure, okay? So instead of that, I'm going to be looking from this area going forward, okay? What do I mean by that? Well, what I mean by that is, are we going to go get some kind of a move like this, okay? Where we're going to get an ascending structure and maybe some supply being taken out. We'll see, okay? There are some supply zones a little bit higher up on the chart, but basically what I'm saying is that I'm watching this area here as a key area, okay? It could be the beginning of an ascending structure. Maybe it's too early to tell, maybe not, but I'm watching for that, okay? So that's going to be the telltale sign when the institutions are going to start pushing silver higher, okay? All right, let's go to the dollar. So dollar's dropping. We had negative NFP that was released on Friday. Let's make a note about that. That was on the 7th. And the 7th was 5, 6, 7 right there. So let's make a note about that right here. Negative, 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 important data, negative. Okay. Hello? There we go. So we had NFP come out negative, and so the suspected move is to the downside. We had something significant take place here on the weekly time frame. We had institutional demand that was here on weekly time frame. So that could have provided a medium-term move to the upside. And what's taken place is that that zone has just been removed. Okay, it has just been removed. So this is opening up the chart for a move even lower should it want to go lower. And I will point out that on the 6-month chart, we have an area of supply that price has been in for a very long time. So could this be what's about to fuel a move to the downside? Potentially. We're starting to see evidence to support that, okay? So as we go to the other pairs, I want you to pay attention to that. So we have the Aussie. And the Aussie is in that limbo stage right now, okay? I was mentioning to you last time that right now this chart is neutral for me, right? You don't go long, you don't go short. It's not giving any type of direction. Yes, we had an area of supply be removed, which is important, okay? Right here, an area of supply being removed. And yes, we had supply being created, but at this point, price is consolidating, okay? It's just basing right there on the monthly time frame. We got basing taking place. And so after basing, price can do two things. It can either go down or it can go up. So because we don't know what's going to happen, whether it's going to go up or down from this basing, it's neutral, okay? We don't have any bias with it right now. If it goes up and contacts supply, then it's bearish. If it goes lower and creates structures in the lower time frame, then it's bearish. But right now, sitting in the middle there, it's a neutral chart for me, okay? Now, when we look at the weekly time frame, we see that demand is in play. So this suggests that we're going to get a bullish move, all right? But it's not that we have an upward trend with demand in play, and so it's a strong bullish bias. There's a moderate force that's coming out of this weekly demand being contacted, okay? So it suggests that there's possibly going to be a move to the upside. Would I be going long right now? No, I wouldn't be going long, okay? It's just I'm watching to see if this demand will be used to facilitate a move up into that monthly area of supply, okay? All right. So I'm still watching for that. Until that happens, I don't do anything. Euro. So euro came into an area of supply that could have very much been used to drop price, and it was not. Okay, so here's the supply area that came into contact, and it's now just ripping right through it as if it didn't even exist. Okay, so now I've got to really ask myself if this area here on the 6-month is starting to come into play. Okay, there's a 6-month area of demand that we have drawn out. It's been contacted several times already. So there was the possibility that it was going to break through and price was going to head lower. But now it looks like it's holding, okay? Also, on the monthly time frame, when we look at what's the latest zone that came into play, it was supply. And so this was suggesting that if there was going to be any pressure, it was going to be to the downside. And sure enough, we got that move to the downside here. But we didn't contact the area of demand that I believe price was heading towards. All right, we fell short of it, and now we're moving to the upside. So there was a good chance that this area of supply was going to be used to facilitate a move down to contact that demand, and now it is totally ripping through. So what's the bias now? Well, the bias is to watch for bullish pressure, okay? You have to be ready to switch your biases. If you're once short because of a supply being in play, if it gets taken out, the banks are telling you they want to push price higher. And you got to listen, okay? You can't be stubborn with the markets. Once they tell you something, you listen. So So this is now opening up a move to the upside. As you can see, we have supply areas that are now being taken out, supply areas being taken out. So I'm going to be watching to see what takes place. There's going to be new demand being created on the time frames, and if we get retracements to those areas of demand, depending on what time frame those demand zones are, I might be looking for a long signal. But for the time being, I'm just going to sit in the sidelines and watch to see what's going on here. As for the pound, we still have supply holding here. But since the euro is already showing me that supply zones are not going to be holding, I'm not going to be expecting this supply area to be taken out. And remember, as I've said to you before, the banks don't trade all the currencies at the same time. They typically choose a couple or a few. They make moves on them, and then after they settle with those moves, they use the other, they go into the other assets, the other currencies, and then they move them in the same direction. So the bias is short-term bullish. Would I want to be going long right now? No, but I'm just telling you what to be watching for, what to be expecting, okay? So short-term bullish with that one. Kiwi, we saw positions hit maximum size on shorts with institutions. Okay, non-commercials reached maximum size, which is indicating to us that they're likely going to take profits and fuel a move to the upside. And you know, this is making sense now, because before, when we were doing analysis and we were looking at the euro US dollar and the pound being inside supply, and then the Kiwi reaching maximum size on shorts, there was a discrepancy there in what we were seeing. But now that we're seeing bullish moves taking place on the euro, a significant one by removing weekly supply, it's safe to assume that we're likely going to see a move upwards on the Kiwi, especially with the fact that they just reached maximum size on their short positions. Okay, so very interesting. You know, we also have that demand being contacted here. So definitely looks like over the short term, we're going to get a move to the upside. Now, remember, we do have some supply here that is holding. So for this move to really kick in, that supply needs to be taken out first, okay? And so far it is holding, so there's been no movement to the upside. All right, US CAD, let's take a look at what's going on here. So US CAD is in limbo. We have supply that was contacted here on the monthly time frame. We have demand just a little bit below, and we have price sitting in the middle. And so it is a neutral chart, just like the other one I was showing you. It is a neutral chart, and it's because we don't know if it's going to move up or down. Okay? Now, obviously, the bias is to the downside because we've seen the dollar moving to the downside. We've seen the euro moving up. We've seen the US dollar, Japanese yen moving to the downside. So, but one thing to recognize is that as those currencies have been moving, this one has not. It's been keeping this range. We have not seen this move to the downside, okay? So we have to determine what is going on here. Why is it holding up here so high? Is it just that the banks haven't been focusing on this pair yet, and when they do, then we'll see the move? Potentially, potentially. So be aware, supply has been contacted a couple times here on the daily time frame. Supply has been contacted here on the weekly time frame, and supply has been contacted here on the monthly time frame. So yes, there is a slight bearish bias, but would I want to be trading it right now? Not really. It doesn't really make complete sense to me why it's holding here. So that means it could do just about anything. And if something is unpredictable, I don't want to get involved with it. I would just much rather trade something that's more predictable. So look at the move here on the US Swiss. Okay, we got that move to the downside, and we got supply being created here. You know what that tells me? If price rallies up to that supply, very likely going to get a move to the downside from there. So this is looking pretty good. We don't have any significant trends to the downside, so we don't have a very strong momentum to the downside. So if you were to want to take a trade off an area like this, there are some risks involved in that, because of the fact that there's no higher time frame trends to the downside. So you got to be careful and know where your targets are. I'd be targeting down this area just above the 86.95 area. I'd be targeting the move to the downside. And I might even want to look at a lower time frame, because we got this at the daily. is a daily time frame. So I would like to even switch this down to a 1 hour chart and take a look at this chart here. And what would be higher odds is to watch for price to come up here and then watch for the signal to the downside, create some supply, retrace, and then that would be your signal. Okay, just shorting blindly at that daily supply wouldn't be the highest odds, but waiting for something like this to take place would be decent. And let's just take a look and see if I can spot something here. Let's just zoom in here and see if I can see something decent here. No, I don't really see anything decent. So what I would be suggesting is I'd like to see some kind of a structure that comes up like this. All right. That way we would have a trend line, and then I'd be watching for a break of the trend line, watching for some supply to come in, and then I would short there at the supply, and I would target this area down here. Okay. If it produces some kind of a structure like that, decent. If not, stay away. Okay. I wouldn't get involved if it didn't, because it's basically the charts are telling you, I'm not producing what you're looking for, so don't get involved. Okay. Yeah, US dollar, Japanese yen. So we got some nice moves to the downside here, and we got some supply recently created right here as well. So this is looking pretty good. Now that we have the euro breaking through supply, this is really giving us indications that it wants to go lower, because the euro can go higher, no problem. The only issue with this is that we've been reaching maximum size on shorts here. So how much lower is it going to go before they start taking profits on their short positions? So it's iffy. If price comes up to this area of supply, again, I would be looking at a 1 hour time frame and looking for a short signal to short from there to a little bit further down, maybe above the 144.50 area, give or take around there. That's what I'd be looking for. And that's pretty much all I see taking place here. Okay. Got to be careful though with that short, because like I said, the banks have already maxed out on shorts. So soon they're going to be wanting to offload those positions to somebody. I wouldn't want to be caught holding their positions when they're offloading them. So just something to be aware of. And Bitcoin, you know, we were pointing out this area of demand. I pointed out to you yesterday in the Telegram channel. If you're not part of our Telegram channel, you should get there. You can find a link on whiteoakfx.com at the bottom of the screen. And so look at that. Demand came into play just like magic. And now we're getting price moving up from it. So this was the expected short-term move, as I was telling you. If anybody was short, I said be careful. We're expecting a short-term rally up from that area. And so that's what we're getting the beginning of. Once this area breaks through, then there's no stopping price from dropping down towards the area of demand that we have mapped out here on the monthly time frame. All right. So that is something that I would be watching for. All right. Let's just quickly look at your comments. I very much wish to be this great doing analysis. Work hard and you will achieve great things. Try fundamentals, you'll be amazed. Yeah. Here's the deal with fundamentals. Here's my opinion when people ask me, don't you trade fundamentals? Don't you take it into consideration? Listen, the largest institutions in the world who move price, they take fundamentals if they need to into consideration. So I don't need to try to discover what price is going to do based on the fundamentals, because the banks have already taken care of all that analysis for me. If I just trade alongside the big institutions, then I don't really have to worry about whether I'm doing the proper analysis of the fundamentals. Okay, they've done the analysis, they know, and I have to trade alongside what they're doing. Plain and simple. You know, many times fundamental analysis is used against us. you know, because fundamentally something should go up and then it doesn't, it goes down. And when you look at the positions held by the institutions, you would recognize that they've already accumulated a position and they need to offload those positions. And so many times fundamental analysis is used against traders. So that's been my experience. This is what I've been showing you guys throughout the years. Hope you guys recognize it. And if you don't, well, there's not much I can do about that. All right. Stay good, stay well. Those are some ideas that I have and some things that I'm watching. So hopefully you can make use of that. And that's it. Enjoy the rest of your morning. It was a pleasure. And until next time, my friends, you take care.